Why do we need accounts? Every one of us has to deal with money and we have to keep track of it. This is what accounts is all about. Accounting touches everybody's life. It may be a housewife trying to balance daily budget for expenses, a senior executive of a big company finalizing merger of a manufacturing unit, or a school student desperately trying to keep account of pocket money. We all keep accounts of financial transactions, consciously or subconsciously, though to organize ourselves, to analyze the events and to plan for the future. Today, any entity enters into a number of transactions every day. These transactions may consist of purchase and sale of goods, purchase and sale of assets, receipts and payment of money, and various other financial transactions. The necessity of bookkeeping and accounting arose due to the fact that human memory was limited and proprietors wanted to know their financial position over a particular period. Bookkeeping enabled the proprietors to remember how the money was earned, how it was spent, how much money was due from debtors, what was owed to creditors, what profit or loss was made during a particular period, what was its financial position, etc., etc. Accounts were also needed for settlements of disputes regarding taxation, as evidences in the courts of law to prove claims regarding debts and similar purposes. Till some time back, all accounting data used to be recorded in books, literally, and hence the name bookkeeping for this activity. Accounting as an information system. Previously, accounting work was performed manually and took long hours in processing the transactions and generating the accounting reports. But with the advent of technology, accounting department was able to eliminate redundancy, reduce the number of workers, and automated posting of transaction from electronic voucher to ledger, preparing the trial balance, profit and loss account, and balance sheet. The accounting information system is divided into a number of subsystems: cash subsystem, sales and account receivable subsystem, inventory subsystem, accounts payable subsystem, payroll accounting subsystem, fixed assets accounting subsystem, costing subsystem, budget subsystem. Click on the above links. Cash subsystem. It deals with cash receipt and payment, both physical cash and electronic fund transfer. Electronic fund transfer takes place without having the physical cash entry or exit by using the credit cards or electronic banking. Sales and accounts receivable subsystem. It deals with recording of sales, maintaining of sales ledger, and receivables. It generates periodic reports about sales, collections made, overdue accounts, and receivable position, as also aging schedule of receivables, debtors. Objectives of accounting. In the past, the main objective of accounting were to ascertain the operating result and financial position of a concern. But with passage of time, the need and aspiration of society have undergone a radical change. A wider role of accounting is, therefore, demanded by the society. Thus, the primary objective of accounting can be stated as maintenance of records of business, calculation of profit and loss, depiction of financial position, provide information to the users. Click on the above links. Maintenance of records. Rules of debit and credit. Every financial transaction has two aspects. The one for receipt of value is called debit, while the other giving away value is called credit. In an account, an amount entered on the left-hand side is a debit, and the account is said to have been debited. The amount entered on the right-hand side is a credit, and the account is said to have been credited. For example, when furniture is purchased for cash, then furniture represents take aspect and cash represents give aspect. Thus, furniture is debited and cash is credited. There are three topics to be discussed below: definition of an account, classification of accounts, rules of debit and credit. Click on the above links. Definition of an account. An account is a section of ledger in which all the transactions relating to the same posting from cash book. All cash transactions are first entered in the cash book and then posted into relevant ledgers. All the accounts opening on the debit side of the cash book are credited because cash or check has been received in respect of them. The reverse method is followed for all the accounts that are opening on the credit side. Cash payments. Cash bank account are not opened in the ledger because the cash book serves the purpose of ledger. Only such contra entries are marked C. This procedure itself signifies the completion of double entry process. Posting from the petty cash book is made at the end of the month.